Welcome back. Our special coverage on India-US trade deal continues. My colleague Prashant joins us, and we are also joined by Neelkanth Mishra, Chief Economist, Axis Bank, and Head of Global Research, Axis Capital. Prashant, take it away.
Sonal, thank you so much for that. Neelkanth, thank you very much for coming back on CNBC-TV18. You know, as they say, when it rains, it pours, right? Budget, trade deal, and what's next? I don't know. But let's just, this is a happy moment, happy occasion, long delayed, and it's finally come through. And the shape and form that it has come through in, which is 18%, and we've spoken with, market participants and economists and trade and otherwise, this is better than what many of our competitor exporting countries have. Your first two or three sort of, reading of what has been announced and how durable is the impact of this going to be on the real economy and, of course, on financial markets?
Look, I must say that I think the removal of this overhang is a very important step. I think as the public pronouncements from the leaders have suggested, these are two very large economies, two of the largest democracies. I think more than the dollars that start flowing because of this, I think the symbolic impact of this is extremely important, is very high. I think the removal of the overhang is very important, specifically for sectors. Now, beyond that, I think the economy had already started to adjust to the 50% tariffs in the sense that overall exports had in September to November 2025 had actually grown faster than they did FY 22 to 25. As you know, there are many sectors which are exempt from IEEPA tariffs, electronics, pharma, petrochemicals, etc. So those have been growing very well anyway without this deal. The commodity exports, like say shrimp, they were anyway there was trade diversion, meaning that if the US market was shut, they started selling to China and Japan and Europe. There were sectors where I think there was some transshipment also starting to happen. And by and large, the tech side FDI had also been happening. So even before the new ambassador announced that India was going to be part of Pax Silica, the investments from the US hardware tech names from India were actually quite robust. But that does not mean that the deal has no value. There were sectors like gems and jewellery, apparel, auto components, where there was very visible impact of the 50% tariffs. I think for the businesses and the employees of those businesses, I think this is a big relief. What it also allows the businesses on both sides to do is now start planning for non-tech FDI. So on the tech side, it was very clear because it's not subject to IEEPA, as well as it's very hard to compete against China without India. But on several others, I think the FDI, the non-tech FDI, this does open the door and reduces significant uncertainty. The last point on INR, the sentiment on INR, remember that, unlike, say, a bond or an equity, the currency actually has no anchor, so there are no earnings, there are no book value, no coupons to value it on. So sentiment, sometimes the currency falls because everyone thinks it is likely to fall. This is a very welcome move. I think it boosts the currency, provides it much needed stability.
Yeah, no, absolutely. You know, on the textiles, marine products, gems, jewelry, etc., how quickly do you think order inflows will turn towards Indian exporters?
Look, the biggest season of the year is the holiday season. So starting from Thanksgiving, in the US that is, in the Thanksgiving for April, for Thanksgiving and ending with Christmas. There are though 4 seasons, and every season there is a refresh cycle and there is a discount cycle.
Right.
So it may be too late for the spring, but maybe for the summer, autumn, and winter, maybe those can actually still be in play. And that should be, so maybe 3 months, because anyway, every 3 months there is a refresh.
Yeah, yeah. Neelkanth, the other areas, right, which is the services exports and people movement to the US, where there were lots of concerns whether there will be some protectionist measures which will be imposed at some point in the future. That idea was thrown around. You think that also goes away now with this deal?
Yeah. So anyway, I mean, those were irrational fears to start with. You look at the fact that uh, services exports from India have been growing in double digits in dollar terms.
Yeah.
And with the changes announced in the budget, where the safe harbor clause has been extended, looks very nerdy and technical. But just think about a foreign firm wanting to set up a GCC in India, and I think to reach 2,000 crores of revenue, which is now the upper threshold, it'll take several years. So for several years, they don't need to bother about a tax authority so long as they're willing to disclose 15.5% as the markup in India. I think this just accelerates that process. And so that fear was, I think, unwarranted and misplaced anyway. But it's very unlikely that there will be changes on H-1B and all that, because that is politically sensitive within the US. So the MAGA crowd will not like it.
Yeah. The rub-on effect of this deal on what the reaction we're seeing on equities, we'll have to see how durable this is, and then the wealth effect sentiment-wise on the broader real economy. You think it could be meaningful? No.
See, you see, if the 50% tariff was not that negative to start with, remember, it was $85-90 billion before, of course, the very fact that there will be relatively less tariffs is helpful, but nearly half of that was exempt from IEPA, the IEPA, the reciprocal tariffs and the penalty, the punitive tariffs. And there is a very high likelihood, in my view, that the IEPA tariffs will be declared as unconstitutional. In which case the US government, through a whole range of statutes, can decide to levy the same tariffs again on every country. So very likely, given how much revenue they're collecting, it will be in this 17-18% range. So at least there is tax certainty now, and we don't have a big disadvantage. But to say that it is going to really boost, I don't want to sound like a wet blanket on what is actually a very positive day. No,
I take that, the point is that if it didn't hurt in a big way, why should it help? That's your point, right, Neelkanth?
Yes.
But the point is, just to counter, it's like, it's your salary is 100 rupees, and it doesn't, you're used to 100 rupees, it goes to 200, you're used to 200. And incrementally, it has to go up from there, right? I mean, so I'm just saying, index is at wherever it is, and we're used to it. So I'm just saying, if the FI is done...
This is incrementally positive. Yeah. This is incrementally positive. And I said the biggest, I think, positive is on the currency. And given how I think the volatility in the currency market had started to seep into the money markets, and through it in the overnight lending rates, the CDOIS spreads, the fact that was also then starting to show up in bond yields. I think all of those risks then take a backseat. And all in all, see, this is a very important overhang being removed.
Absolutely.
For those of us tracking the tech sector developments, the fact that all of this drama was unrelated to a more strategic break from India. That's not a positive surprise, but for many who actually thought that perhaps in the attempt to get closer to China, the US was going to sacrifice India. I think for those people, at least, this is also a very welcome development. They should reassure them.
Yeah. Neelkanth, just last thing, 30 seconds. There is no, this is it, right? There are no nuances, detail, etc., which will throw us off in the coming days, right? Because the full agreement will have to be, but there won't be that many white spaces in that sense. Otherwise, they wouldn't announce it like this, right?
Look, again, I don't want to sound like a wet blanket, but if you think that a trade deal is a trade deal, you talk to the Koreans and the Canadians, as some people have been tweeting about. See, and even the fine print of the executive order, we haven't seen the executive order yet. The details on the Indian side, of course, the deal is signed, it's effective, but I doubt that many concessions have been given on agriculture from India's side. Most of the things we saw in the budget were pretty much the adjustments that needed to be made. But you know, these things can be volatile. I mean, we know how the U.S. administration has been changing deals on the fly. So it's a good move. I mean, I don't want to sound too negative on a good day.
You are sounding not negative, but you're sounding a little cautious. And
Because yeah, I don't think it is that important. I think for the economy, if you are able to get a rate transmission going,
yeah,
I think
that'll
what,
do the
what
job.
happens in these deals is actually far less important than that.
Okay, well, everything helps, right? Little bit. So we'll see. Thank you very much, Neelkanth, for joining us. Great conversation as always, and appreciate your time here on CNBC TV18. Well, I think we'll say goodbye on this program, but we'll have business lunch, which will pick up on the action in just a bit from now. Stay tuned. Markets, of course, looking very good.